I was introduced to Nikki last year. Some of you will know from direct experience that MAP works really well with non-exec directors, and Nikki is a non-exec director. Importantly, she's built and sold agencies and SaaS businesses herself, which means that she's been there and done it. So we always like people that have, walked the path that you're currently walking. So she's owned agencies in London, Paris, and Brighton. Her last agency went from a small agency in Brighton to actually being a global organization, and moved from marketing services to 2 SaaS technology products, which she's going to demonstrate or talk through how they did that from within that agency today, which I think will be of interest to some of you. They were named one of the best places to work in the UK for 8 years running, treble in margin and generating 4 times more revenue and 10 times more profit as a result of that. So now, as an agency specialist, non-exec director and cognitive behavioural therapy coach, is that right? Cognitive behavioural coach?
Yeah, CBC, yes.
She's working with agency owners to create a strategy and coach leadership teams. So I hope that today you'll be sort of in one of a number of buckets. Either this is going to be some new stuff here that you've not heard before, some stuff that maybe you have heard and you are aware about, but maybe not doing it as well as you could be, and some maybe you are doing it as well as you could be, but you'd like your team to be a little bit more commercially focused. And that's some of the stuff that Nikki's going to be sharing today in terms of what does commercially successful look like, what are some of the things that you could be tracking, and how do you get your team on that journey as well, start to develop that culture within the business. So I will shut up and pass over to Nikki. And as I say, anything that comes up throughout, pop it in the Q&A and I'll pose that to Nikki at the end. Over to you, Nikki.
Thank you very much. Very happy to answer questions as we go. So it's all good, all good. So creating a profitable culture and a high-performing team, what is profit culture? And we're going to get into some real detail here around bloated keyholes and profit vampires and beyond. You may have heard of these things. You may think, what on earth is she going on about? But this is about socializing why profit is so important and giving your teams reasons to understand and really see how profit can be created and what they can do about it. So the more we can be engaging in our language and our visuals around it, the better we can get our profit culture really working well. So if you could have a pen and paper or however you take your notes and a calculator, or you could do a mental arithmetic in your head. It's not hard maths we're going to be doing, but we will be taking some numbers and looking at some of your own numbers to see how this stuff applies. So just have something to write with or think with. Firstly, do you have a profit culture? Do you know what that actually feels like, what you want it to feel like, what you'd like it to change to? And a big part of this is, what's your why behind wanting to create profit? Now, I know that probably sounds really daft, but having a really clear why, not just to be sustainable, obviously that's a good thing, but why is so important, because often people working in businesses think founders want profit just to make themselves rich, which I know is a massive sort of misdirection, because a lot of us have put a lot of time, blood, sweat and tears and often our own houses on the line to get the agency where it is. But it's about what's it beyond making money for yourself. What is it that we're doing here, and why could people believe in it? Why should people believe in it? And in my previous agency, or the last agency at Propellernet in Brighton, our why was we wanted to be able to throw off enough cash to reinvest in SaaS technology products ourselves. We didn't want any investors coming in. We didn't want to work for anybody else. Didn't want anyone else telling us what to do or calling the shots. We wanted to do it ourselves. So the why behind profit generation was to have a great business, treat people really well, be one of the best places to work, but also invest in the future for everyone. And I'll talk more about that. So as well as the agency business and the marketing services, we created 2 SaaS technology products. Now, we knew one was going to be hard. Getting 2 that worked was an absolute miracle, because this is difficult stuff to do. But the way we did it was we changed the way the agency operated. The agency was throwing off plenty of cash, and we took people out of the agency to develop these products. And they were the people identified the problems the products were solved in the PR and comms industry. Now, those individual businesses are now bigger than the agency itself, independently, and we sold Answer the Public last year, which is brilliant for everyone involved. So the whole profit cycle has come back round and people can really see and feel it. As I said, did it whilst being one of the best places to work in the UK, and that was a deliberate action. Again, we wanted to throw off profit so we could treat people really well and do some really mad, crazy stuff. I captured the story in Super Engaged, which came about because people asked me, whenever I stood on the stage and talked about our journey, have you written a book? Would you write a book? And I didn't know I had a book in me, but I captured the story, and that became a springboard for me to go and help lots of other founders, because many got in touch to say, can you help us do what you've done, particularly around the commercials. Whereas Paul just said, we trebled margin, quadrupled revenue, made 10 times more profit in a very short space of time. So this is some of the principles that we applied, we're going to talk through, but that having your why clear is so important. And be really interesting if you would have your why and if your team know about it.
Yeah, so just picking up on the SaaS point, some of you will be aware that we built Go Proposal from out of MAP, and it was a combination of me as the leader of MAP and an accountancy firm, and James, my business partner, who had built this product in other sectors. And I think probably the most common sort of routes, if you like, for SaaS businesses is something that your customers can buy from you or something that your peers can buy from you. So Go Proposal was the peers. We built something that we felt that other accounting firms could benefit from because we had great success with it ourselves. It was proposals and engagement letters that we were using during our sales process. And we felt that other people that are, walking the same path as us would benefit from that as well. So that's how Go Proposal was born. I wouldn't say that we needed to kick out a lot of profit from our service businesses, our respective service businesses, MAP and James's business, in order to fund Go Proposal, because we actually did it on a very, very lean budget and very simple MVP, and we were revenue generating within the first few months. But the reason that we needed MAP and James's other business to continue to be successful and kick out margin and be high performing is so that we didn't need to give up on Go Proposal. If it wasn't quite working on the outset and go back to fixing problems, we could allow both businesses to be fruitful without one dragging down the other. So that was really important for us to continue to have high performing service businesses alongside a high performing SaaS. It didn't have to be one or the other.
And that's a really good point in terms of solving problems that your peers have. That's exactly what Answer the Public and Coverage Book did. And our peers started to buy it, and then our clients started to buy it, and then they went global. And if you already know what problem you want to solve for yourself, it's highly likely your peers are going to need it too. So it's a great place to start. Very happy to talk more about the SaaS side of the business at any point, but let's get into the profit culture. So I've got 5 simple rules, if you like. The first one is visibility. To have a profit culture, profit visibility is key. You've got to know your numbers yourself because it's hard to build what you can't see. And often profit isn't shared with the team and people are a little bit nervous about it, but then it's hard for them to influence it if they don't know what numbers they're dealing with. So I've got 5 simple questions. Let's put a spotlight on those numbers. What is your overall gross profit percentage? Do you know that? Have you spoken with Paul? I'd imagine most of you do. Maybe write that down. Can you see gross profit by client? Not everyone can. A lot of people can, but not everyone can. It's really useful if you can, because you can work out where your profit's coming from, obviously. Then what percentage of your business is your largest client? If you've got it by profit, brilliant. If you can work that figure out now, amazing. If you can't see it by profit, go by revenue as a proxy. But what percentage of your overall business is your largest client? Good number to know. And is your largest client worth more than your net profit? Because if it is, your business is probably at risk. Because if anything happens to that client, you're going to be in trouble. We're going to look at whether your business is in balance, and you're going to be able to answer these questions. You've probably got answers to some of them already, maybe all of them. But that balance point is so important for building a profit culture and a profitable future. So visibility is one thing, but the next thing is to be balanced. Because if you understand the level of balance in your client revenue portfolio, you can manage the risks. Now, this is an approach that we looked at with a company called Results International, who buy and sell agencies. They're in M&A. And when they look at agencies in terms of valuation, they're looking to work out how much balance there is in the business and what risk is involved. And the idea here is you take your top 15 clients, if you have 15 clients, or do the maths if you've got a smaller number of clients or larger. But 80% of your revenue should come from your top 15 clients, split like this. Top 5 clients, the biggest clients, generating 60% of your profit. Middle 6 to 10, generating 25%. Clients 11 to 15, 15%. Ideally, spread out like this. So no one client is worth more than 12% of your profit, because most agencies are aiming for double-digit net profit and ideally 15%. Now, if your net profit is only 9%, you don't really want any of your clients to be bigger than 9%. This is where it starts to get interesting in terms of mapping out how your business is in balance or not. Now, when we did this exercise, we had a bloated keyhole, which is as hideous as it sounds. And I know lots of agencies that I start to work with have this, and we work quite hard to try and rebalance it. And that's a lot of revenue or profit is concentrated in one client. Now, we had 40% of our business sitting with one client. And when we saw this, we're like, okay, that needs to change. And then that bloated keyhole in the middle, lots of other clients that weren't really getting the time and attention they deserve because there was such dominance at the top. Now, if that 49% had left for some reason, we would have disappeared. Interestingly, they did want to leave. They wanted to in-house all of their business. Now, we had a brilliant relationship with them, and thankfully they gave us 2 years' notice, which was absolutely brilliant because otherwise we would have disappeared. And what we did is took it as an opportunity to say, okay, we'll help you in-house if you'd like us to. We'll train you to find the right team because you've got to get that right. We'll train that team to work in an agency way because it's different client to agency the way you work, as you all know, and we'll help you get there. And we charged a premium for that. So it actually turned into an opportunity, but it helped us rebalance our business, knowing that that 40% was going to go by working with different levels of freelance, bringing in new business, having some urgency around the pipeline, etc. It helps you to pull the right levers if you can see into the future. And having a business this shape is very, very risky. So you want to be more aligned to having a balance and track that client concentration. Where is your revenue concentrated? Track that concentration number in your dashboards going forward. We're going to have a look at how we can do that in a minute. Avoid any one client being more than your profit margin. I don't know how many of you may have that issue at the moment, but if you do, this is really something useful to think about and to share with your team so they can see how the issue needs to be addressed too. So,
Nikki, can I just ask a question?
yes, of course.
I think that thing, I know we said it offline as well, but that thing's fascinating about the fact that you effectively helped your largest client to move away from you to in-house those services, which I think is really clever. Is there any part of you, like in hindsight, when you look back now, do you think you should or could have proactively talked to them about you probably getting ready to in-house now, or did you disagree with their decision to in-house? Like
in-housing, yeah, it's really interesting, isn't it? Because it tends to be cyclical. It's like a trend. Suddenly everyone wants to in-house, and then realize how hard it is to keep that team motivated and develop them and grow them in one business. And they start to go back to agency, because agency you get a lot of different perspectives and you can learn from lots of different people. If you've got a very small creative team in one client, it's hard for them to get all the awards they want to win and have their portfolio grow, and it's just different motivations. So we probably could have spotted it earlier, but the training wasn't developed enough. We had to do it really fast to be able to offer the service. It was a kind of a reaction to, oh dear, our business could disappear. But I think, that in-housing is cyclical and it will come round again. There was a whole spate of it last year. We possibly need to have that in our armory as agencies of, okay, we have this as an offer.
Yeah, that's
if you want to in-house,
yeah.
And price it at a premium. If you went to the garage, you'd ask the mechanic how to do X, Y, Z. They wouldn't charge you what they're going to charge you to do it themselves. Price it at a premium. Do not give that value away for the same money.
Yeah, brilliant.
Okay. So to have a profit culture, aim for a balanced portfolio of revenue and risk. Don't put your eggs in one part of the bucket. And again, share it with the team. So issue or rule number 3, surface any hidden issues. Have any of you got any profit vampires? They are as sinister as they sound. And this is where you really need to understand what your profit is by client. Profit vampires come in many, many guises. Here's a few. Unconscious over-servicing. You simply don't know you're doing it. That's really dangerous. And we need to find these issues quickly. Over-servicing due to a demanding or a delightful client. We used to have a client that everyone in the agency absolutely loved working on because the product was incredible and the client were brilliant. And we ended up losing money because they were such a lovely client to work with. So we had to get a handle on that. Scope creep without budget control can kill the business. Fear of losing the brand. This is tricky because it's emotional, but there's things you can do about it. Maybe you're seduced by the brand and you want it on your portfolio because of the fame element, but often we end up paying for that kind of fame. And if you price to win it at the start of the relationship, that's hard to then come back from. And possibly the most alarming, and this happened to me in a weekly new news meeting we used to have on a Friday, somebody piped up and said, why do we need to make a profit? The hairs went up on the back of my neck. I was like, oh my word. So we had a whole conversation around why we need to make a profit. Some points here, you'll know these. Growth, obviously, if we want to grow, we need to be able to grow our services, our products and opportunities. We all want to be remunerated in a really good way, founders, owners, team alike. Security, if COVID's taught us anything, we've got to have a cash buffer for downturns. It buys us peace of mind and time to make decisions. And the old adage, we ideally need to have at least 3 months of overhead cover in the bank. I would argue nearer 6 because of COVID. Most people are probably thinking that's insane. There's no way I can get anywhere near that. Some of you may, which would be brilliant. But just having 1 or 2 is quite a tricky position to be in. Now, that's the game of running an agency, is how you pull all these levers, but there are things you could do about it. And also, obviously, focus. We're not charities. Many agencies aren't charities. Most agencies aren't charities. And we're not chasing fundraising. We need to be self-funded. So these all seem like pretty obvious things to talk to about why we need to make a profit. A better question, which came from someone else in the room, what can I do about profit? Because sometimes people can feel disconnected from profit, particularly if it's not shared by the owner, founder, or the leadership team, because it's like a number that doesn't really mean anything. They don't think they can have an impact, when in actual fact, they can. And it's a lot about confidence and holding their value as a team. So these profit vampires can absolutely be stopped, and some agency holy water coming. Know how much you're over-servicing and create a mantra of no work for free. Would any of your team want to work for free, unless maybe it was for a charitable cause? Why would they? So why would the agency? Over-servicing, talk about why we're doing this, even consciously, and think about reasons with the team to change it. Again, no work for free.
Yeah, this was just a thing to say that I think in order to understand profitability, which obviously the individuals need to understand themselves as well as you as a leadership team, you can't get away from tracking time, which everybody's aware of. But I sort of identify that there seems to be 3 categories of agencies. One is that they're not tracking time at all because they don't see the value of it, or they just think it's too much work, or they just never used to track time, so they've never started doing it. Obviously, when you were a 1-person band on your own, you probably didn't see the need, and then it's just never come in. So some agencies are just not tracking time at all. Some are tracking time but not doing much with it. So you're putting in all the admin and the time and the effort and the frustration of tracking time, because nobody likes doing it. Your team, however hard we try and however much we inspire them, they're not going to enjoy tracking time. So it'd be a shame if you're not doing anything with it. And then third is that you've found a way of streamline it as much as possible, make it simple, and you're actually gleaning some useful insights from it. And we were saying, weren't we, Nikki, before, that the second one's worse than the first one, because as I say, you're frustrating your team and putting in all that time to track time and then not doing anything with it. You might as well not track time at all. But obviously, where we want all of you to get to is the third stage. You found a way of streamlining it, and you're able to get some of these insights that Nikki's talking about.
And I find it fascinating, because some of the pushbacks I've had about not tracking time is that, well, we don't price like that. That's absolutely fine. Brilliant if you don't price like that, because you want to be looking more into value as opposed to time and materials. But you still need to know what the time is costing you to be able to work out your profit.
Absolutely.
So, scope creep. It's about education and being able to manage that scope creep and having confident budget conversations. So again, no work for free. Fear. This is hard, because if you're worried about losing a client, like we were with a 40%er, you may overservice it and you'll put your other clients at more risk because you're worried. So it's about either deepening the relationships to reduce losing the business, or get other business in. Find some way to mitigate that fear, whether it's with that client or outside of the client. But fear can make us do very odd things, so we need to be less fearful. If we've been seduced by the brand, that's okay at the start, but you can look for opportunities to grow and price differently. And if you price it to win, that's really hard, because it may have been a procurement negotiation and they will nail you to it. But you can look to change your scope. You can look to renegotiate should you want to. And I really encourage people to embrace procurement. It's one of the things that helped us grow dramatically at Propellant, because we had really good, open, honest, proactive conversations with procurement, where normally agencies are a little bit like, I don't want to speak to them, or they don't put enough time and investment into thinking about the deal as much as the work. And that can really break the business. So if you've been priced to win at the start because of procurement, you can actively manage that going forward. And lastly, and one of my favourites, if you're operating at a loss and you can't change any of the above 6 points, it may be time to say goodbye to that client. And I say to liberate with love. Do it kindly. Say, we can't afford to work with you anymore. Our pricing is here. You're paying this. Could you make a change on the difference? Could you come towards what our higher pricing is? And if the answer is no, then it's literally time for them to go. Possibly many of you have done this already, but it's not a negative for you. It will feel like it, but it actually will be much better for your business and the rest of your clients and your team. I'm just wondering how many people on this call may have a client that they think kind of need to liberate, and they may know all these numbers. And it's not a bad thing to do. They could be better off somewhere else too. So surface those hidden issues, work out how to fend off any of those profit vampires, and don't let them suck the life out of your agency. Because if you don't do it, no one else will. It's really important to get hold of them. So I think you all know the answer to this one. Is profit a lagging or a leading indicator? And this is where it's really interesting in terms of the numbers that you talk about in your agency, because the cash flow, the P&L, the balance sheet, all really important documents. But how you help people see into the future is really important. The profit is a lagging indicator. It's a consequence of all the other actions you take. It happens when you do everything else right. So let's look at some of the leading indicators and get obsessed with the future that we can influence, not only the figures in the past that have already happened. We need to do both, but we can influence the future. So one of the biggest leading indicator areas is all that new business activity that you'll be doing. How's your pipeline looking? And do you share it with your team? I'm sometimes amazed that this information isn't shared with the business, because how then can people get excited by what may be coming up? Now, maybe showing my age here. Does anyone remember this? This is Clarkson and Hammond with Top Gear and the cool wall. And they had the wall where they used to log all the cars and say whether they were cool or not. Taking that, and I know often we're remote these days, but sometimes we are in the office too, have a visual of your pipeline in terms of where people are in the process. You can have a Kanban or a Miro board online. Some clients I work with have it actually in the office, and the act of moving client logos across from just start to conversation till we've won it or we've lost it is really good for to understand within the business who may know more about that client, who may be excited about it, and what the team can do to add more value to the pitch as it comes through. So maybe your new business person, maybe it's you, doesn't feel so lonely sometimes in new business, and so that new business doesn't come disconnected from the business. So having this kind of pipeline visible for all to see is really interesting. So my cat's just arrived, so you can probably hear her meowing. She likes to sit on the table. There she is. So if you can make your pipeline visible, it helps you to think about your future in a much more confident way. And if you've got a really strong pipeline, you can look to liberate profit vampires, and the whole thing starts to connect because you've got more confidence. So lots of other leading profit indicators. I may have gone slightly over the top here, but you can see where I'm going. So having a forecast, recognizing the revenue when the work is coming in, not when the PO comes in. We all know how dangerous that is. How many procurement preferred supplier lists you're on? That's a really strong indicator of future profit potential, because you can have some very positive conversations if you do have that kind of metric. Do you know that? Do you actively try and get on preferred supplier lists? Sales metrics, obviously, number of leads, number of conversions, number of pitches, your pitch conversion rate, your customer acquisition, how many long-term contracts you have, and your renewal rates. Client satisfaction, client temperatures, massive indicator of how profitable you could be, unless you're over-servicing because you've got a very delightful client, which then will kill your profit. Compensation to revenue forecast. How much of your revenue, not your turnover, but your revenue, are you spending on salaries? And knowing what the industry averages are and where you sit. Because if you've got that number, it's a clear indicator of how healthy your business is. Paul?
Just really like that you're using the word forecast on the end of that as well, because compensation to revenue in the past, there's not much you can do about that. So it's looking at that, but for the future, because then we've still got time to change that before it's too late.
Yeah. Absolutely. And often, and we'll talk about how we connect up these conversations in a minute. We look at the dashboards. Knowing what that forecast of compensation to revenue is can help you plan your recruitment. Because if it's done in isolation of actually knowing what the future revenue is, I know this sounds really simple, but it happens a lot. You can end up over recruiting by mistake. There's a lot that goes into recruitment decision, I know that, but if you can see the numbers and it tells you a story, you can have a much clearer picture, you've got much more confidence. When you last put your prices up, that's a clear indicator of how profitable you could be in the future. If everyone put their prices up by 10%, it would go straight to the bottom line. I don't know how many of you have or how many of you will, but I always encourage agencies to put their price up every single year. Live accessible reporting, so you can take action. If you don't have insight on your numbers, it's really hard to act. Freelance variability. I'm a real fan of having a level of freelance within a business, because your resource never matches your workload, and that freelance level of variability gives you the ability to flex your resource. Client attrition rate. What are you doing about it? Is it active on your part, or is it surprising? Back to the temperatures. This helps you understand what your future profit could look like. Your team engagement, your team are the front line for any client conversation. How they feel is going to have a direct impact on your client relationships. Overhead cover, how long could you run if no more business came in? Really important number to know, and so on. Now, all of these, you don't have to track every single one, but it's just to give you an idea that the profit number is a function of so many other things. And ideally, if we can talk about some of these things with the team, it impacts the culture and the behaviour and the conversations that we can have. Because the best insight you can gain is to calculate the future costs and benefits of your current decisions. So again, forecasting your costs, forecasting your revenue, knowing what it looks like going forward and all the metrics that fall off it. We used to have every Monday a trading meeting called Pipeline and Pulse. And the idea was we would share the pipeline of new work coming into the business. The new business team would talk about that. We'd look at the workload required to resource those pitches and often say, are we taking on too many pitches? Because in this instance, volume is vanity, conversion is sanity. And I would often cut out pitches if we thought we were spreading the team too thin. It's horrible doing 5 pitches badly, much better to do 2 really well. And then we know the commercial pulse of the business. So what was our forecast telling us? What was in the cash flow? What was it looking forward? And what was it looking like? That can then go into people and planning, as we've just said. So that Monday morning meeting was absolutely rock solid in terms of where we are now, what the future's looking like, and how good the future can look in terms of the pipeline. So rule number 4, focus on your leading indicators, and to have that profit culture, share them to create future motivation. Celebrate the behaviours you can influence rather than just focus on the profit of the past. And the 5th area is having clear management information, dashboards so you're driving with the lights on and drive the business forward and you're not running on empty or have any surprises. Oh, just jump to the end there. Why did that happen? Oh, okay, that's odd. We're missing a whole load of slides. I'm just going to stop sharing.
Yeah, feel free. Stop sharing, Nikki, for a sec. That's great. Just to fill the void a little bit, I think the pulse thing really resonates with me as well. A little bit like we said with the time tracking. Last thing you want to be doing is putting all the effort in to track all this management information, and then it's just stuck with the leadership team. It's like, how do you galvanize the team around a regular cadence or regular pulse, as you say, to make sure that these things are discussed? Otherwise, you're wasting your time putting all the data together. So what's the pulse in the business to make sure that this stuff is used and actioned? And in those meetings, you will develop the MI as well, won't you? Because people will come up with other ideas, new things that you could be tracking. And I think that's where the culture piece comes in, isn't it? It's like it's coming from the team as well. It's not just coming from leadership.
Yeah, definitely. Thank you, Paul. Excellent filler. Because agency finances are simple, but they can be fragile if they're not under control, and be able to see into the future helps give you that control. So in its simplest form, we need to understand last month, this month, next month, what is our revenue, what is our overheads, salaries of freelancers, and what profit does that leave us with? Because can we afford what we're spending? That's the biggie. And if you can't, there's a different problem to solve. Cash flow dependency, or sorry, client dependency can be a red flag, and cash flow could be a problem if people aren't paying you on time. So is there a debtors issue? Moving premises, so incurring extra costs in terms of investing in a brand or website, is it a big red flag? Can we afford to do that going forward? Have we actually put it in the forecast so we can see that we can afford it? Managing profitability by project only is an absolute killer. I've seen this happen so many times where the projects look profitable, the overall business overhead isn't included in the project costs. That needs really clear care and attention, and not forecasting in freelancers. So there's some things that we need to make sure that we do have, we can see them so we know we can afford what we're spending. And there's some headline commercial health checks, again, beyond the P&L, the balance sheet and the cash flow statement, that are really good to track. So revenue, not turnover, so taking out those pass-through costs. Gross profit percentage, and knowing what you're trying to aim for, ideally at least 50%. I don't know if anyone's number is ringing very high or very low compared to that 50%, but ideally that's what we want to be going for. Net profit, ideally double digit, over 15 is good. Profitability by client, can you track it, can you see it, and can you see where the issues are? Knowing your client concentration, as we talked about before, can you put a percentage figure in terms of your revenue or your gross profit as to how your clients are aligned in your business, looking at the bucket? What's your pipeline value and a weighted value? Because not everything in your pipeline comes in, we know that. And how have you assessed that weighting? Months of overhead cover in the bank, so how long could you keep trading if everything stopped tomorrow? Compensation to revenue number, the ideal is between 45 and 55%. If you're running a lot higher than that, you potentially have too many people in the business, maybe you're paying them too much, or you've not got enough business because there's too many people hours not being sold. If it's way lower, either you're pricing brilliantly, or maybe you're not paying people enough, or maybe you've got too much going on. Revenue per person needs to be in context of your average salary. There's an industry number of £100,000 of revenue per person. However, if you're a consultancy and everyone's paid £100,000, you're going to need to generate a higher revenue per person to get some profit. So it's totally dependent on your average salary. It's about 2.5 times your average salary is the revenue per person you should be looking for. Utilisation. Have you got everyone billed out to the right level? Are they utilised to the right degree? And what's the economic headroom? What's the potential you've got there in terms of what you're not billing out? Really interesting number to track. What could you do if you were getting that revenue? What choices would that provide you with, and what freedom? What level of billable to non-billable? And this changes as your business grows, but 1 to 4 is probably the maximum in terms of billable to non-billable, ideally 1 to 6. Be interesting to know those numbers and how you're tracking them going forward. Employees to freelancers, ideally no less than 10% freelancers in your business if your business works in that way, to give you that flexibility when the resource doesn't match the workload, and so on. Debtor days, I think, is a really important one if you're not getting paid on time, and how you can attract that, because that will really hit your profit if you get paid quicker. So these kind of numbers are really useful for running your business and talking about with your team to create that profit culture. A dashboard could be as simple as this. By month, looking into the future. Some of my clients do this on an 18-month rolling basis, so they can see really far into the future. Most agencies can only really see 3 months into the future, depending on whether you've got long-term contracts or you're much more project-based. So that revenue, and that's confirmed as the top line, with the pipeline coming in. And the third level there, MLO, most likely outcome. What is your revenue that's confirmed plus your probable pipeline? Then gross profit, next line down to net profit, overhead cover, client concentration. You could add in any of the other metrics that we just saw on the previous sheet, but what is it that's looking into the future for your business? And for your team, traffic light it. Show them where the good stuff is and where the challenges may be and what you can do to change it. This is where it really comes into the conversations, those pipeline and pulse meetings. This is how we would run them. Simple headline numbers and what was looking good and what was looking challenging. And you can add in more complexity if you want to, or more granularity in terms of departments, billing versus capacity, and actual live job profitability, because then you can make decisions that will impact the future. And often people see information in different ways. This is clients I've debranded. One of the ways that they look at their data, because some people aren't that number happy, but graphs can say a bigger story. And this makes a lot of sense to them in terms of how the business is performing. I'm not saying you have to produce this graph, but what's the gap and how to close the gap is a really interesting conversation with that team. So there's a lot of numbers I've just gone through. How do you remember all that? Well, making your numbers memorable is really, really important. And I took this from when I worked with Nissan, years ago now, over 20 years ago, and it was about to go bust. It was bought for $1, taking on all the debt. And the Nissan turnaround plan, the Nissan 180 plan, was supposed to turn the business around in 5 years. And it consisted of 3 metrics. And these 3 metrics applied to everybody that was in that business or touched that business. So all the people at head office, all the people in the dealerships, all the partners, suppliers, agencies, everybody. And those numbers were 1 million car sales, 8% profit, and 0 debt. And everything we did, we had to align to 1, 2, or all of those numbers. What was amazing was the business turned around in 3 years, not 5. And Nissan is now one of the most innovative car companies on the planet. They were the first company to actually produce a mass market electric vehicle. It wasn't Tesla, although all the fanfares there. They produced the Roadster, it was ridiculously expensive, and I think only 5 people could afford it. But the Nissan Leaf was the one that came out first, mass market. And Nissan have been leading the charge there quite quietly, behind sort of on Tesla's coattails, I think. But having those numbers memorable in a very complex business was really useful for everyone. So I applied the same principle in my last agency, and we had these numbers, not quite as elegant, but you can see where I'm going here. So 100, 90, 80, 70, 60, 50. And I can still remember to this day what they are. £100,000 revenue per person, 90% team engagement, 80% client retention, because sometimes you lose a client, you can't control what's happening there. 70% utilisation, which was a minimum, not a target. That's an interesting conversation in itself. 60 precious seats, because we didn't want the agency to get too big. We wanted to invest in the SaaS area, and 50% gross profit. Now, those numbers, everyone in the business knew, people could recite them. I didn't ask them to stand on chairs and do it in a meeting or anything like that, but people knew what those numbers were and they fed into their reviews. And the idea was they could show how they impacted them and what they were doing to make them better. So they'll be in the deck for you to see later. So fifth and final area is clear management information. To have that profit culture, make commercial data actionable. Know where you're headed and help everyone else to get there. So in summary, know your numbers and make them visible. I talked to agency about this and they said, you know what, we're going to create a profit club. We're going to get this conversation really going in the business because we have to be able to talk about it at granular level. Balance your business, visualize the shape you're in and know your client concentration. Look out for those profit vampires with everyone knowing what they can do to fend them off and have the confidence to liberate with love where you need to. Share your pipeline and other leading indicators. Don't just concentrate on the profit of the past and create that motivation about the future. You know, pipeline and pulse meeting is a great way of doing that. A drive with the dashboard lights on. Get the lagging and the leading indicators clear and make the numbers memorable. What could you get down to? I worked with another client recently and we had the 5-4-3-2-1 plan. 5 new clients, 4 million revenue, 3 wins, so 1 in 3 pitch wins, and they were condensing 2 of their departments into 1. So everybody in the business knew what those numbers were. And again, I can remember them. I'm not in the business day to day. It makes it really simple to work out what's going right and how the people can affect the numbers going forward. So someone who you may be thinking of a future sale or perhaps an EOT, a strong profit culture can set yourself up for really good conversations, giving you plenty of commercial freedom, which ideally is we can all get to, and then invest that in any way you see fit, whether it's in the future of your business, creating a SaaS, or for yourself. Good luck.
That was brilliant. Thank you, Nikki. It might be worth you just posting your contact details in the chat if you like. We'll send it out over email anyway, but just in case. There we go.
Okay.
Perfect. As I said at the start, really, why we like working with people like Nikki is we're singing from the same hymn sheet. You're talking about all the same sorts of principles that MAP talk about, but having a non-exec director who can actually help to influence the leadership team can be really powerful, I'd say, especially when they're working in tandem with a finance partner and not, God forbid, against one another. So lots of the same stuff, but obviously Nikki helps in areas outside of finance as well. But today we've been very much focused on building a profit culture. I just wanted to signpost a few things because everybody that is on here is a MAP client, and to help you to sort of connect the dots with how you would track some of the things that Nikki's talked about today. So most of you will have been introduced to the concept of a capacity planner. And if you've not, that's something that your finance partner at MAP can talk you through. But when you're talking about tracking utilization and the term that you used of economic headroom, I think, which is basically what's the revenue potential of the team that you've got based on realistic charge out rates and utilization. There's a capacity planner is the tool to do that. You've got the budget tool, you've got forecast, revenue forecast. So that's when you would track actual plus probable or weighted or forecasted pipeline and being able to break that down in different tabs with different departments. So you've got that available to you. Management accounts, obviously, when it comes to revenue recognition, understanding your P&L year to date and forecast to year end against your budget. And then we use, for those who don't know, we use a tool called Fathom to produce the management accounts. And we can also add other financial and non-financial KPIs in there and visualize it through graphs and charts, which can be really powerful. Feel free to pop any questions, by the way, guys, or pop your hand up if you'd rather me unmute you, or pop in chat, whatever's easiest. The Profit Club, I'd love to understand a little bit more about that and like how you see that working. I know it's one of your clients, but whether you had something similar with a different terminology in your business or how they're going to do it, and the making numbers memorable thing. I was thinking like we could do with like a phrase on that, like the 5-4-3-2-1 plan sounds great, but it won't always be that for everybody, will it?
No, and every agency has a different set of numbers. What is what matters to them. And if you look at your future plan and the numbers that are important to make that happen, they may not necessarily be neat. I've got one agency that's a 20-60, 20-70, and that's to do with profit and utilization. I can't remember the other two, but they're different types of numbers. But if they mean something to you, I mean, Nissan 180 was genius because it's turnaround and it made so much sense, very elegant. But it's just to help people with, there's so much that we could look at.
Yeah.
What's going to make a difference to your business? And then how can we make that memorable?
The reason I think the Profit Club is important as well is that although we want all of our team to be more commercial, usually in a small business, there's often the people that are doing the work, we're also wanting them to be some form of manager or commercial leadership team, and they're having to sort of think about both things. They're not separated from the day-to-day and the charge of operational side of it. So having some form of club or some form of platform where they can have that as a space to move themselves out of the weeds and focus on the commerciality of the business.
Yes, yes. We used to call them Johnny Balls plans. That's brilliant in the chat. Yes, showing age. Yeah, the profit club is so important because if you are thinking about a future sale, the buyer is going to want to know who can commercially run the business without you. And if you don't have a commercially savvy leadership team or other people in the business, that's going to be a problem.
Yeah.
So commercial awareness is so important. And if
Yeah.
profit isn't talked about now, how will it suddenly be talked about in the future if the future of the agency is that it's going to be sold? If it's not, you still need to have people talking about it, because if you are thinking about creating future value for a sale, why not create that future value for you?
Mm.
In any way, shape, or form, the future value is definitely based on the profit that you can throw off. And if everybody else in the business has some way of connecting to their day-to-day, it will be much easier for it to happen.
Oh, that's that thing about creating options, isn't it? It's not about, this is not just about selling a business or keeping a business. It's giving yourself options. Either way, you want a highly profitable business, ideally. But, you know, don't patronize. Everybody on this call knows that, but hopefully today has helped trigger a few ideas. If anyone's got anything they want to share in terms of things that you're going to go away and look at, maybe things that you hadn't thought about before, or Nikki's helped you to think about it differently, that would be good, just to know what's resonating. If there's anything you want to stick on in on the chat. Obviously, if you'd like to speak to Nikki directly, her details are all on there, so feel free to do that. There's no commercial arrangement with Matt. You're free to just go and speak to Nikki. And if there's anything that you would like Matt to further develop in the reporting that you're getting, ideas that you triggered from today, then just go to your usual contact at Matt, and we'll be delighted to help with that. Super. Okay. Well, all that's left to say is thank you very much, Nikki, for giving us your time today. It's very much appreciated. And we'll share slides and videos later on today.
Fantastic.
Thanks, Nikki. Bye.